All right. Once you've considered and made a determination with regard to the type of company you're going to start with, you move into some of the more detailed pieces, such as procuring a tax ID number from the IRS. Any company that's going to have employees or its own owners is going to need a tax ID number that is its identifier for all of its tax filings going forward. And as a company, once you get into selling products or services, you're also going to need to consider whether you need state level tax, sales tax identifier numbers, or basic state tax numbers. So your accountants can often help you with these pieces of it, but your lawyers will as well. So that's the next step in the process.
When we start with organization, you're going to consider who is going to own the entity. Normally, we recommend that the entrepreneurs individually own it, but there could be tax considerations that you may find push you into ownership by a trust or something like that. You also, when you form, you're going to do some initial authorized capital. That's how many shares, what you're going to put in as consideration for those. Next, you'll look at kind of officers and directors. Think about directors are kind of more policy oriented. Officers are more execution of that policy or that strategy. So the officers tend to be the ones who are signing documents on behalf of the entity. The directors are the ones that are directing the officers what to do. We also recommend that upon your initial organization that you have some type of an equity holder agreement. What this does is it sets from the early on who gets elected to be a director, who gets, how you get elected to be a director. It also tells how you can transfer your shares, to whom you can transfer your shares, and occasionally it will also restrict your transfer of shares. And you want restrictions so that everybody knows who's sitting at the table. And sometimes what you'll have are called rights of first refusal. So if one entrepreneur no longer wants to be part of your venture, they actually have to offer their shares to the other venturers before they can offer to a third party. A few considerations that you'll need to do is the fiscal year determination. We recommend for most corporations or LLCs that the calendar year is the preferred. There are some types of entities that is not the case, and Jeff and I have also worked with companies from all over the world where the Koreans tended to be a March 31 was their fiscal year. There's others that it's a June 30 is the end of the fiscal year. So you need to make sure that you understand what makes the most sense for you. Registered agent is just somebody who, in the event that there is a lawsuit, you have to have a registered agent that accepts service of process. Normally we use one of the Delaware service providers. When you're thinking about where you're going to qualify as an entity, you tend to do it in the state that you're actually residing, but you may find eventually you have to do more states based on whether you're doing business in that state. Each state statute has a different definition of what that means. It could mean that you have employees there. It could mean that you have sales there. It could mean that you have a facility there. You have to look at each of those, because anytime you have to register to do business in a state, it means that state's going to tax you. So you really just want to make sure that you're complying with the laws that apply to your entity. And you also have to keep in mind that taxes will follow activity. Finally, a couple governing things. You have your underlying corporate governance documents for corporation, it's the articles and bylaws. For an LLC, it's an operating agreement. Those set forth, the way that the entities operate. So, and I think the final thing that we talk about is that when you're doing your organization, you always have to consider that when you are going to have investors, you need to make sure that you do everything correctly and you keep everything together. So what you want to have a minute book that has all of your corporate documents in it. The investors will want to see these. They'll want to make sure that you've done everything right. They don't want to see holes. So it's a little bit of I wouldn't call it a hassle, but it's something you need to keep in mind, that what will an investor want to see in order to put money into this company, and they're going to want to see that you've done everything correctly up to that point.
Yeah, no, it's a good point. Building a document repository early on where you keep fully signed copies of agreements can be really helpful, because it avoids the need to go back 6 months, 12 months later and dig through emails looking for a signature to this or that.
Yeah. So. And we've had clients who do it electronically, or you can also do it in paper form. But it's something that you're going to have to do. And so you should be prepared to do it, and you should actually embrace it, because it's going to come up every time you do a transaction, and every time you do have people invest in your entity, they're going to want to see this.
Yeah, and you can work with your lawyers to make sure the books are in good shape. And there also are some online systems for maintaining stock records that are getting much better than they were 3-4 years ago. So those are also worth considering, especially early on when it's easy to get them up and running.